2016. So firstly, I want to explain about introduction. For your information, companies in Malaysia are those incorporated under the Companies Act 2016 or under the previous Company Act 1965. Generally, companies can be divided into two types of companies, namely statutory companies and registered companies. However, our topic in this assignment is on registered companies incorporated under the Companies Act. A company may be incorporated as one of the following. Firstly, a company limited by shares. Second, a company limited by guarantee. And third, unlimited companies. In this assignment, Abur Partnership Business used financial advisory services from Badrol to further develop their business. Badrol suggested to Abur Partnership Business be changed into a company form business, but Amar still not confident with the Badrol suggestion, and he requests for special presentation partnership enterprise. So next, I want to explain about classification of companies based on Companies Act 2016. Firstly, companies limited by guarantee. Companies limited by guarantee is liability of each member is limited to such amount as member undertake to contribute in the event of its being wound up. Company can be only formed for the purpose of providing recreation or amusement, promoting art, religion, science, charity, pension, or scheme, and promoting any other object useful to the community. May further be required by registrar under the guidelines to submit segmental reporting together with financial statement. Companies limited by guarantee must ensure that none of its member or director use the company or financial resource to conduct any form of political or unlawful activities. Secondly is company limited by share. Company limited by share is liability of each member limited to the amount, if any, unpaid on shares held by the member can either be private company or public company. Liquidation of the company whose shares have been fully paid up the shareholder are not liable for the company debt. Lastly is unlimited liability company. There is no limit on the liability of each member. Unlimited liability company shall be either a public or private company. If the company went up and has insufficient asset to settle its debts, the shareholder will be required to contribute to the assets of the company to enable to settle its debt. So I think that's all from me.
Assalamualaikum, my name is Natasya and I would like to tell you guys about what is the 5 type of company in Malaysia. So the first one is sole proprietorships. This is one of the simple and cheapest form of business entity to establish among the other. If you register your Malaysian company is a sole proprietorship, you are only required to pay an annual fee to the Companies Commission of Malaysian SSM, which is the statutory body that regulate corporate and business affairs in Malaysia. This type of entity is owned solely by only one individual as his or her liability is unlimited. This means that when a business or is declared bankrupt, creditor will be able to sue the sole proprietor's owner for all the debts on to respective merchant. Personal income, personal asset as well as employment income are liable in this context. The second one is partnership. Partnership is similar to sole proprietorship except they are more than one owner. In other words, it's like an extended version of sole proprietorships. Partnerships comprises of a joint entity holder with 2 or more people and a maximum of 20 members. This type of business setup is more suitable for professional firms such as auditor and lawyers. The partner in a partnership business entity are also bounded by unlimited liability. The third one is limited liability partnership or LLP. The limited liability partnership or LLP is a hybrid between a partnership and private limited company. It is similar to the conventional partnership but with the advantage of a private limited. So these are the some of the feature of LLP. So the first one is it is a body corporate and a separate legal entity from its partner. LLP has perpetual successions. The LLP is capable of suing and being sued, acquiring, owning, holding, and developing or disposing of property. LLP has a fewer complements requirement and is a much more affordable business vehicle. For instance, LP is not required to audit its account annually. Next one is private limited company, or we call it a sendirian berhad. A private limited company by shareholding is known as sendirian berhad company. This type of company is a separate legal entity from its owner, which means this company is considered as a legal person that can buy or sell property, present into legal contract, sue or get sued in court of law. So the last one is public limited company, or we call it as berhad. A public limited company or berhad is rather similar to private limited companies except that its share can be offered to the public or for fixed period and any other forms of subscriptions. Public limited company are required to have a minimum of 2 shareholders and has more than 50 members, and maximum number of member is unlimited. This type of business entity usually involve the company being listed and is government the Security Commission of Malaysia. Okay, for the next topic, I would like to share to you guys about general guidelines for business registration. So the first one is citizen and permanent resident of Malaysia should be 18 and above to register a business. You should register the business within 30 days from the date of commencement of the business. The nature of registered business should not contravene any laws. You also should submit a copy of permit, license, letter of approval or supporting letter when registering a business that requires special consent or approval. After you get all of the copy, you should submit application for registration personally to the nearest office of the company's commission, or you can send it by post. You also have to prepare attached documents such as photocopy of identity card, photocopy of partnership agreement if you have any, or permit, license, letter approval or supporting letter from another agency if you have any.
There are 2 types of financial reporting by companies, which is Company Act 2016, and the second one is the Financial Reporting Act 1917. There are a few functions that are regulated by the Company Act 2016. The first one is accounting report to be kept, and the second one is annual returns to be submitted authorities, and the last one is financial reports and statements be prepared by the companies. Okay, the second one of financial reporting is Financial Reporting Act 1917, which is there are 2 independent bodies, which is Financial Reporting Foundation (FRF) and Malaysian Accounting Standards Board (MASB). The functions of Financial Reporting Foundation is oversees the operating activities and develop the conceptual framework, and the functions that from MASB is adopt financial reporting standards. Next is annual report. The annual report is the main document of financial and general information. There are 6 classification of annual report. The first one is the chairman, the chairman statement. The second one is a corporate governance statement. The third one is audit committee report. The fourth one is statement on internal control. Next is social responsibility statement, and the last one is financial statement. Example of audit committee reports. Audit committee reports is provide a quarterly and annual snapshot of the financial reporting process. Okay, the second point about the chairman statement. The chairman statement is really important because a report by a company's chairman once a year that gives information to shareholders about the company performance during the past year.
Just to get the point, and then it is a sponsorship, which is this company which have sponsor. Some company have a very potential and also growth, and also it's the company which is doing as market, it can move forward to the as market. Okay, next. There is the first advantage of company where the financial. Okay, the first one is immediate liabilities. Liabilities when you issue to you convert to the company. So the financial is very your asset will be not if the bank if the company have to debt with the bank, so the bank cannot take your property or your own asset, but the bank should only take the company asset. The next is legal entity. Legal entity is the which is if have the assistance or secret from the director and also member. Okay, next is professional substation. Okay, professional substation is the which is the is the policy that the director may come and go, the members may come and go. For example, one of them died, but the company is still going because they have the legacy to continue the business of the company. The next is the project cost and respecter. Of course, they have a lot of a lot of technical workers in the company, so they can price the risk, which they have a very big fund. They get commission and they can take very risk project. Okay, the next one is taxation. The taxation partnership pay income tax, but any company is pay the corporate tax on their sales profit. They will range of the loans and tax deductible costs that can be offset against the corporate profit. Okay, now there is a 5 disadvantages of company valuation. The first one is recession. Okay, the company when you convert the company, you have a lot of legal you should follow, and yes, more legal requirement you should follow in the company, and to make sure you must follow one by one. Okay, the second one is management initiative. Management initiative is the but sometimes the company or the manager of the company take advantage to the person benefit, and that's why they can like they can bring losses to the company. Okay, this one is a difficult information. Actually, there's a lot of rules that regulation you need to do to make sure that you have to achieve the company goals. Okay, next one is fund management. Fund management is from the actually it's when there's someone or shareholder or manager or director in the company have the founders that they cannot identify it because of there's a method, but sometimes the method is not proof enough. Okay, the last one is review of battery system.
Okay. So five different element disclosure between sole trader and the company. So for asset is a personal thing. So for sole trader, personal asset are at risk, while the company personal asset are protected from the company, because for the company the personal asset are a different entity between the company and the owner. So next is about the capital account. In sole trader, they have only one capital account, while in the company we have one or more capital account. Since there are more people in that company, so there is no access to tax income splitting in sole trader, while in company there are greater flexibility for tax planning. In sole trader, the tax income is on that owner of the sole trader, while in the company there is a greater flexibility for tax planning, which because the owner and the company is a different entity. um and next, for the sole trader, there's only have one only item in owner equity, which is owner account, owner equity, one account only. And for the company, there's a lot of items, which is in the shareholder fund. We have a share capital, return earning, other revenue, and capital reserve. For this owner equity in company, there's more item that we have, because in company we have many item to pitch. Next, in sole trader, we did not need to make any audit at the end of the financial period, while in company, they are required an audit at the end of financial period. This is because in company, there's more strict regulation that they have to pay attention for. So then for the conclusion, this topic is given an overview about the legal aspect of the company formation and the financial reporting responsibility of the company. It's also giving us a huge field of information, the flow of the formation company and financial report itself. So